What's up? Good morning. It is August 22nd, 7:11, and I'm not talking slushies in the morning here Central Time. So today I'm just going to jump through some charts before market opens, and if you have questions, please put them in the comments, and I see if I can answer them. If there are any charts you want me to check out, just let me know. I'm here in my backyard. If I flinch really badly here in a minute or throughout, it's because I pulled my back. It's not really comfortable. So let's share my screen and go to some charts here. And hold on a second. Let's just make this thing live. Chart thing. Just bear with me here, folks. I am not the best at this yet. Yet is the thing. Don't want that. Why can't I show my chart screen? I don't know. Okay, I don't want to show that. This is not good. The hell? Get rid of that. Alright, let's see. Put that up. Let's try this. Here we go, folks. Alright, let's see this. Please let me know, because I'd really like to know if you can't see this. And let's just minimize this for 1 second so I can see if you see it. Yeah, you do. Alright, so let's do this. I'll just squinch this so I can see you. And if you have comments, sorry for the delay here, but well, bear with me because my second cup of coffee. Alright. Okay. It's not gonna work. But anyways, okay, so this is Nvidia. So I have a couple things I use when I look at charts. Let's see if we can squinch this a little bit. All right, so what I've got here is I use this Lux Algo, a couple of different their indicators, and what I'm looking for primarily when it comes to these indicators is where are the big block orders and where have they been in the past. And as you can see, there's this gigantic one that pretty much spans from July 8th to today. And we can see where on August 5th, well, really Nvidia just sort of started going south on the 11th of July, headed down. This is a daily chart. Bottomed out on August 5th after the yen carry trade blow up and the Japanese central bank raising their interest rates. First time since I think it was 07, which is pretty significant. But they quickly came out after the market sold off Monday and said they wouldn't be doing that anymore. I suspect that was a phone call from the United States saying, don't do that because you're blowing up markets on a global scale. So I don't see that happening, and I see that carry trade was put back on, and most likely over the last week, and the market has gone up. So this is Nvidia. It's following, broke through the 9, broke through the 20, and it's hit this sort of resistance level here. Pre-market right now, it's at 120.90. So 129.90. So right about there is where we'll probably open up, which is right at the top of here on the 15th of July, and as well as on the 9th of July, and then probably going back here to the 14th of June. So that to me is resistance, and I honestly think this is all about the Federal Reserve speech by Powell on Friday. This will determine directions of markets in a sense. So we're above the 9, above the 20s. That's very positive. So I use pivot points as well. And you can see with here, I'm using the traditional setting. There's resistance at 134.60. The pivot pivot point is right around 118.57, and then there's support down here at $100.99. So you've got potential resistance here with these sizable block orders of the past, which I see $131.12 as resistance, and then $134.60. So chances are I wouldn't be surprised if we play within the 118 to $118.57 and 134. Now, earnings come out with Nvidia on the 28th, which is next Wednesday, and that could be a catalyst for this to go higher, which could be 152, could be 168, and then 184, and then 200. So I would not be surprised if this does go higher. I wouldn't be surprised if it does go a little lower and maybe touches the 9. So be cautious of that. We're sort of in this chop zone, and what you want is any new additional positions that you have in this. You want to see a breakout above sort of this resistance level here before breakout, and then confirmation and pull back to that resistance level, and then move higher. And that would be a bull flag that we could be seeing forming here. So just be patient. If you have this position on, just be cautious that you could see another move back down if things change. You know, what would change what would be the catalyst for this to change for Nvidia? Earnings, guidance, those are the two biggest things. Second, go to September 17th when the Fed meets again, and that could be the next situation there with them. And if they don't lower interest rates, you could see this pull back. If they do raise interest rates, it's a confirmation we're in a recession. There's something severely broken, and we could see a rally off that. That could be a catalyst as well. So those are really three catalysts: one, earnings; two, guidance; and three, the Fed. So take that into account. So let's jump over. Let's take a look at the Qs, and I think you're going to see something really similar to this. Give my program a little bit of a time to set up here because it takes in new data. But, you know, something similar to what we're seeing with the Fed, with Nvidia, sort of this 1-2 kind of hit this kind of rate, place. MACD's up, slow stochastic is at the top. This is my switch volatility index I use, volatility switch index. This shows changes in volatility. That's pretty interesting. And then this green wave here is a new one by Flux Algo here to show you because I think this is pretty cool. And anyhow, so this is by Flux Charts Theta Shield, and basically it monitors option theta decay, which can be telling to as the stock peaks and valleys. It translates into option play and theta decay. If you don't know what that is, look it up because it's pretty in-depth. Anyhow, so similar situation, 476.25 is where I see pivot point. 498.34 could be a resistance level. We'll see about that. Check out the S&P. SPY is what I'm going to use. And something similar of formation, basically similar in that 3 days of sort of sideways kind of movement, sort of big move on the Monday the 19th, bit of nothing on the 20th, and bit of nothing. And as you can see in my support and supply and demand came in here. There's resistance here about $564.83. Pivots right around 551.14. And then you've got a big chunk of block orders that have been put in place in the past down here. We'll just go halfway, $518. And there's support, according to my pivot points, 523. So markets trade, banks and hedge funds trade within a channels. That's how they make money. And when they break out of channels, they make money that way, or they break below channels, they make money that way. So look for these support and resistance levels as you're planning out your charts every week. Let's check out actually the 10-year U.S. Treasury, because I thought this was interesting. Yesterday, it fell roughly 0.16%. So it got as low as as low as 3.76% and as high as 3.83%, closed at 3.8%. High was 3.83%. This was a pretty move because of the revision of non-farm payrolls to 118,000 down, which is crazy how far off they were. And so that's interesting. Well, we have a little bit of a bounce back, which should be expected. If you're a bond trader, it's up right now. It's at 3.833% yield. When yields go down, bond values go up, and when bond yields go up, bond values go down. You can see that here in the TLT, and you can see that something similar to that. We'll probably see TLT go down a little bit and come back down to some level of support. Throw the pivot points on it and see what we got here. So we got resistance, which is now becoming support at 98.18 on TLT. And then our pivot point here is right around 93.18 or $93 or so. So there was a big block of selling in this area on TLT. As you can see, it moved jig-jaggedy, a block, big block, sort of big blocks on buying, and that's where he created this channel, and then a breakout higher. So I'm looking for this block here to become support, and we could see a pullback down on TLT to 95.83 or in that range, really 96. Yeah, to say 95.83, and then there's resistance here, or was resistance at 96.49. That could become support as well. So take that into account when you're looking at these things. Solano, which is something I own, it's a pain in the ass right now, to be honest with you. It's just trading in this channel. It has been for a while. Pretty crazy how this moves. To me, it's doing nothing, in my opinion. I'm in it, have been for a long time. So I would hope at some point we see another break higher or up this level. Bollinger Bands are starting to come together, so it doesn't really give me hope in that way all that much. So we'll see. That's not really exciting. And so what else we got here? Let's check out Tesla, because that was in the charts of interest that Mark put up on the Platinum channel. If you're not a subscriber to the Platinum, our service, it's $60 a month. We have a 14-day free trial going on, and that could be really cool for you. Go to bus13.ai. That's bus 13.ai, and check us out with the 14-day free trial. And then after 14 days, it goes $60 a month. And we teach swing trading. We show all these different charts and stuff every morning. We have the bus portfolio series, which Kerry puts together. This is his ideas about AI and AI companies and who could be the big AI companies of the future. He has also what we call the cheat sheet, which is a fundamental breakdown of the companies he likes, and gives price projections, buys and sell, buy targets on it, and it's really in depth and interesting. You get a whole lot for $60 a month, but we have a 14-day trial, so check it out. Here's Tesla, and as we can see, Tesla is similar to the Qs, similar to Nvidia, similar to S&P. You got 3 days of movement sideways. could be a setup. We got the 9 about to break through the 20. That's encouraging. Could be a setup for a swing trade. MACD crossed over on the 19th. Slow stochastic is up. Volatility is sort of going down a little bit, but we can see that spike up. There is, in my theta indicator from flux charts, is a basically a theta decay. This hasn't signaled a don't buy it here kind of thing when it comes to the options, sort of call options on this, but this could be resistance. Pivot on this, according to my setup, is 234.64, so it could be a nice little bump. Pre-market is 225.05, so that could be a bump to here, and could be a really nice swing trade. There is resistance in this area, so take that into account. What else would you like to see? Let me see if anybody's commenting here. Oh, turn down. Oh, sorry about the bird. Good morning. How do I join the tribe? Go to bus 13.ai and check out our 14 free trial there. That's cool. And what else can I tell you? Sorry about the birds in the background, dude. But, it's probably the nicest thing I'll hear all day with all the chaos that we have going on in this world today. But the cool thing is charts really don't lie. I really like, here's one other thing here. This is the high yield spread index. I look at bonds because, in my opinion, bonds are the truth. They're leading indicators of what is to come in the future. If you go back and look at the bond market in 2019 and look at the treasury market, the German Bund market, it was indicating something was, in a negative sense, was coming. And you saw that in a drop in yields. You saw that in a drop of high yield spreads. Now, just so those who don't know, high yield debt is also referred to as junk bonds, and they have a lower rating rating. So you have ratings of AAA, which is the best investment grade bond you can buy. It goes AAA, AA, single A, triple B. And then you get below triple B, you get into double B, and you get into junk, and that's high yield debt. Now, some high yield debt has financed some of the biggest companies in the world in their startups. They pay a higher yield on the debt, but there's bigger risk. So when I look at spreads and high yield debt, it's sort of similar to looking at the equity market. And when high yield spreads jump, like we saw back here in basically end of July up until the 5th of August, this was telling me that those who were in high yield debt were getting out of it. They were selling. So the yields, if they're selling, the yields go up, or excuse me, if they're selling, the yields go up and the bond values go down. And that's what happened in high yield debt. And then since the 5th, it has recovered back until the 19th of August, where it bottomed, which meant people are coming back into high yield debt, taking more risk. But that turned yesterday just a little bit. So we'll see where this goes in the next couple of days. I watch this because this is what institutions like banks and big hedge funds, because the bond market is 6 times the size of the equity market, it is very telling of what those guys are thinking. And what this pivot shows is there's maybe these guys just took advantage of this trade since the 5th. So they sold out here when, say, sold out when high yield started moving, or high yield spreads started moving higher, which means the high yield debt went up. The value of that bond went down. They sold out. They bought back in up here on the 5th, and they've made a ton of money because they leveraged this stuff up really big. And they now are taking profits out of this. And so chances are we'll see this spread go higher, which means yields on high yield debt will go up and the values will go down. So keep that in mind. I use that as more of a where is the market going? Same with the Treasury market. Since April 15th, we've seen yields on the 10-year Treasury go from a high of, what was it, 7.73, not a high, but a second high in comparison to back here in October of 23. Yields have gone down, which means people are buying treasuries because they're taking risk off. And that's what institutions think. Now, you get down in here, if you bought, say, the 10-year, in this case, 10-year U.S. Treasury here, you bought it here, you made money all the way down here. So roughly 80, was that probably 80 basis point change in value. If you've leveraged, if you're a bank or a hedge fund, you leverage this up 20 to 1, you've made a lot of money. So you may be seeing a bottoming in yields here, which means an exiting of out of those 10-year treasuries, and you'll see yields come back up, maybe back up into the 3.8 to between 3.8 and just, let's say, 4% range. So that's a trade, but maybe also this is an indication that banks and institutional investors, hedge funds, don't think this market is all that great, this economy is all that great, and something bad is coming. I mean, we'll see, but you can also see back on the 28th of December of 23, a bottoming there, support, support basically created on the 5th, support again yesterday. So there's basically 3 points of potential support here. So we can see a move back, and we can see a channel trade in yield. So I always just keep an eye on it. Anyways, so that is my thoughts on everything right now. I really appreciate y'all, those who joined in, appreciate you jumping in, and those who watch it, have watched this, I appreciate you taking a look. Check us out, Bus, www.bus13.ai. That's www.bus13.ai. I'm going to try to do this pretty frequently throughout the week. And so if you have any requests on stocks in the future, just check me out, and or just keep an eye out when I go live and share those here. So in the meantime, have a great morning. I'm going to try to finish my coffee and start my day. But in the meantime, have a wonderful day. Stay curious, and always live loud. See ya. And I don't know how to shut this off. There you go.